People, now than ever, are really in this emotional flux. Like they're stuck. Think of some of the questions they're going to ask. Are they going to have a job? Do they want to leave the city and look for more space? Or will the pandemic be over after a vaccine, meaning they should just stick it out? Do they buy first? Do they sell first? Good morning, investors. Bradley here from Watson Estates, and welcome. Thank you for joining us on the largest and fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. We like to have some fun. We like to cover what exactly is going on in our local marketplace and try to figure all of this out. So today we're going to cover some interesting stuff, looking at some of the latest news, the top articles. Are Toronto area realtors the new therapists? Might need to go back to school with this type of career. And why is there so much confusion in our marketplace? Trying to decipher where that confusion is coming from, and then giving you guys a very clear picture on the history and where exactly we stand in our market today, and what were the most sought after listings of 2020. A little bit of window shopping, if you will, now that those open houses are closed. But I don't know about you guys, I got slammed with that windstorm. In fact, our household, we were out of power. We had to get a generator from my father-in-law and almost 24 hours. So we're getting a little nervous about stuff. Everything worked out just fine. But I actually saw an article from Toronto Stories that maybe impacted you guys. I don't know. Potent windstorm in Toronto sends construction debris flying off Condo tower. And there's no shortage of those construction sites. Listen to this. The storm was so powerful, it blew debris from high up construction sites into the sky and eventually into buildings and onto the ground below. That sounds awful terrifying, especially if you don't know what it is. Come to find out, it's foam insulation. Foam. Run. Still scary though. At its peak, Hydro One reported 230,000 homes and businesses without power, with areas in southwestern Ontario the hardest hit. I know we were hit. Maybe you guys were too. Let me know in the comments, were you affected by it? But you'd think we'd have figured out how to protect our hydro systems by now. What do I know though? My father-in-law, the power generator guy, come over to bail us out when we're running low. He tries to explain electricity to me, and I just look at him. I'm like, what? That was a pun. That was literally a pun. Terrible. But we're gonna move off of electricity puns. All right. We like to have some fun on the show. Let's get away from the puns. Let's dive into some current events. Sorry, that's the last one. I swear. We're gonna move on. Okay. Make sure you guys hit that like, subscribe button, by the way, and we're having lots of fun. Download the last 5 episodes. Help us boost the channel. I'm glad you guys are here, and I have a good time. If anything else, me and my grandma, it's a great way to connect during COVID. Are Toronto area realtors the new therapists? Now, Toronto.com had an article, Toronto real estate fatigue and COVID-19 anxiety are setting in, according to realtors. I think this is great because we like to look at the numbers, which we will do today as well. But I think it's important that we note the mental health of the people around us running around in the real estate industry. Forget just realtors, but clients as well. Realtors say now is a good time to find a deal as prices may finally cool due to surging COVID cases in the season. So let's see what they have to say. The average Toronto house price broke records in June and kept climbing despite COVID pandemic, reaching 1.025, whatever, a lot of money in October. But daily cases in Ontario have hit record highs as well. On Saturday, they had over 1,500 new cases, and the pandemic is expected to worsen by quite a lot. Quote from Tim Hudak, the Ontario Real Estate Association president, I believe. I don't know his title. Oh, CEO. We are continuing to urge our members across Ontario to stop hosting open houses. Limit face-to-face interactions as much as possible and use virtual tours first and to the greatest extent possible. Got it. Noted. If the trend continues, Ontario's red zones could eventually face a lockdown similar to March, which brought the hot real estate market to a standstill. You remember those days? It feels like forever ago. It was only a one wave ago. Will this affect the market like the spring is the $1 million question? In this article, they had 2 agents, Mireille Mansour, and Odine Eccleston, some familiar names that we've seen in past articles, talking about what they think is going to happen. What they say is they don't think real estate sales will come to a screeching halt. Rather, buying and selling will only pause. So here's a couple quotes from one of them. It said, in the spring, because it was so new to us, we hadn't built up that tolerance yet. Interesting thought. Number 2, there was so much uncertainty. People were just paralyzed with fear. And maybe you yourself were feeling that, whether you're just a homeowner or an investor in our city. Both realtors, they say, feel most people will continue to conduct business as usual during the second wave, but perhaps a little more carefully. I was asked recently, I was hosted on a show, the Toronto Real Estate Show. I went over there and asked me, like, do you think this is going to be as bad as the first one? No way. The first one was 10 times worse. And why? Psychology. That's why this article is so important, for us to recognize the mental health, the psychological impact that COVID can have on our marketplace. That is what's going to dictate the second wave and what it means for prices. The article continues, Toronto prices continue to rise through October despite the pandemic, which is an indication of the demand. But after months and months of hustling between realtors, buyers, and sellers, they say exhaustion is setting in. And I agree. I'm seeing this with various clients as well, especially people looking for their own home. There's an emotional attachment that wears people that we'll get to in a second. People are getting what I might call, this is Eccleston, a little bit of Toronto real estate fatigue. First thing to keep in mind is the seasonality, right? It's a good time for buyers to get a deal from sellers who want to offload remaining listings. There's been a lot of activity, a lot of running. Maybe you weren't able to sell it. And the buyers are just kind of either they found something or like, oh, what the hell with this? And so this is an opportunity for you if you've still got that endurance as a buyer to move in or scoop up those investing deals. And I just, as a personal note, I find on average for someone looking for a property to live in, it's between 10 to 15 properties that they want to see before they purchase. And I know in my head, any of you realtors could probably relate, let me know. But I know in my head, we've seen 10 units, we've seen 15 units. They're going to want something soon. They're going to be moving very soon. It's very much a concept in sales, is you put it in front, put it in front, put it in front, and eventually they'll buy. That first property is very unlikely you find the first one and you fall in love, but there is this point where they reach where they're like, to hell with this. I'm so emotionally invested in looking at these units. I can't take it anymore. I need a house. And that's what happens. And that's what I'm hearing. That's the underlying message I'm hearing in this article here as well. Now, I, as a realtor, I'm not emotionally involved, which obviously helps with negotiating too, but it also means that I got a lot more endurance. That's why we see hundreds, if not thousands of homes a year. So the article continues. She adds that the market has recently been in a state where it's no longer just following sustained trends, but almost reacting emotionally. Wait a minute. So people react on an emotional basis, but does that mean that the market on a whole reacts emotionally? Yes, because the whole is comprised of many individual parts who are very heavily impacted emotionally during a time that's so emotionally driven. For example, they say, look at Joe Biden. They say the Toronto activity boosted immediately after the announcement of the projected winner, which happened in the last week. Think about that can have such an impact. Does that have anything to do with prices? Not really. That is a psychological, emotional response. It doesn't have to do with jobs. Maybe a little bit, but it's all psychological, guys. You don't realize how psychological this game is. Literally the next day, they said, after they announced the winner, everything picked up. My showings picked up. My offers picked up. I sold everything. Well, that's honest. I had like all these listings and then they're gone. Thank you, Mr. Biden. Right? Moods and emotions have a heavy impact on real estate activity. And as I mentioned, psychology drives the local market. But people, more than now than ever, are really in this emotional flux. Like they're stuck. Think of some of the questions they're going to ask. Are they going to have a job? Do they want to leave the city and look for more space? Or will the pandemic be over after a vaccine, meaning they should just stick it out? Do they buy first? Do they sell first? Some of these are common problems, but no question COVID is really making them more difficult. It's leading to so much stress for clients, which I'm seeing too. I see that. There are announcements every week from the government telling us numbers are up, numbers are down, we're locking down, we're opening up. What a good quote. And the way that they wrap this article up is nowadays, realtors feel more like therapists. And maybe listening to my podcast has been a form of therapy for you, but imagine if you didn't have a platform where you can listen to someone with half their senses, which wouldn't be found here, by the way. But our city right now, we're in a mental health crisis. We really are. But can you blame us, right? It reminds me of back in university days when I was paying for school, I couldn't afford electricity, right? Those were some of the darkest days of my life. You guys are feeling dark. You all need some Jesus. That's it. Grab the Bible, have a little read. You'll learn some stuff. You'll feel a little bit more hopeful. All right. Before we move on to our next topic, I saw an article from Better Dwelling. I thought this is the best place to put this in. Okay. Income in 2020 wasn't the problem. It was not the problem. And here's an article. They say CMHC finds Toronto and Vancouver mortgage debt ratios fall, but not as it seems. CMHC data shows that mortgage debt to income ratio made a sharp drop in Q2 2020. So you're facing all of these stresses, but income really shouldn't have been a stress because of CERB. It actually, based on this article and as we've talked about in the past, it was way overdone. Like there was plenty of money in general for Canadians. But the mortgage debt to income ratio is a percentage of outstanding mortgage debt to disposable income. If mortgage debt grows faster than income, the ratio increases. If income grows faster than debt, the ratio falls. So in a normal scenario, ratio falling would be a good thing. Well, better dwelling ain't going to let you off that easy. And we recognize that this is all due to CERB. Okay. When we look at the Canadian mortgage debt to income levels, it made a sharp drop down to 105% from 115%. We jump into Toronto and it's now at 141% down from 148%. But here's what they say. Government transfers like CERB didn't just support incomes, but boosted them in aggregate. As these programs fade, which we know is now, we should see the ratios return close to pre-pandemic levels. There's actually a possibility they may be higher since mortgage debt is still rising. Maybe. But are we in a time of crisis now like we were during the first wave? No. Especially your job's at risk now. Now, these are probably still real questions for a lot of Canadians, but generally speaking, CERB did what it was meant to do. It was a very successful program. It's just not going to feel very successful. We got to pay it back later. But Justin is out here heating Canadian incomes up like a microwave. Oh, the microwave. One of those things you really take for granted, I'll tell you. But you know what happened the last time he got caught zapping the other children with static electricity? You know what? Not much. He got off pretty easy, actually. He was just grounded. Static, grounded. Stupid. Funny, but stupid. If you can't laugh at the joke, laugh at me laughing at the joke, because I still find them really funny. Okay, so let's move on to our next topic. We got a lot of goodies today. Why is there so much confusion in our market? So maybe you're sitting back, you're like, you know what, Brad? I listen to your podcast. I'm pretty confident. I know what's going on. I'm feeling like pretty good. Generally speaking, there's question marks, but there's opportunities in the question marks. These are all things that I say. Well, why outside of our conversation that we have, why is there so much confusion? And I found an article that was from John Pasalis, and I really like this article. I think it's really good. So check this out. I think it explains it quite well. This is really the history. And the article is called, by the way, Toronto condo prices down 9% from peak. In early October, Bloomberg published an article called Condo Listings Surge 215% in Signal of Downtown Toronto Weakness. And we covered that article as well. Well, a couple of weeks later, Livable published an article that's called Toronto Condo Prices Rise Over 8% Even as New Listings Surge. So wait a minute. We got listings surging. We got prices going up. That's a good thing. We told you guys months ago condos were not going up in price. That was an illusion, and this article is talking about that. In fact, the Livable article, they actually quoted Jason Mercer, the Toronto Real Estate Board Chief Market Analyst, saying this, and he did say this, and it is accurate. There was still enough competition between buyers to support average selling price sustainably above last year's level. Okay, that is accurate. But then what? Prices are up. I thought prices are coming down 9%. So technically it's true. We actually have an environment where we are up and we are down. Year over year, we're up. Month over month, for consistent months, we are down. We're on a steady downward trajectory. And so what he actually did in this article, he focused on the downtown Toronto condo market. And since it was hardest hit in the GTA, why not? Best place to look, right? But the media, see, the problem is the media, they just spit out numbers in complete chaos, which are accurate, but the numbers don't tell you the story. And it just confuses the public. It's like that time I yelled at the lady at Hydro One and she shut off my electricity. What an abuse of power. But the media should not be abusing their power. They should be trying to explain it. And that's very much what what I want to do here today. So here we go. Here's the full story. Here's the history of condos downtown Toronto. Well, condo prices were relatively steady during the first 3 quarters of 2019. This is where our story begins. The average price for the third quarter of 2019 was $714,000. But in the last quarter of 2019, in the first quarter of 2020, the market changed significantly. A sudden surge in demand, coupled with very tight inventory, resulted in a very competitive market, which pushed average prices up to $820,000. That's crazy, guys. $714,000 to $820,000 on average into the first quarter of 2020. That's 100%, 15% increase in 6 months. Woo-hoo! Well, since then, Average condo prices downtown have fallen 9% to just over $750,000. So here's the question. Here's a couple things actually before we get into the guts of it. Thing that we need to note here, number one, is the decline in the second quarter was partly due to steep declines in the number of large and more expensive units selling. Because there was proportionately fewer expensive units selling in the second quarter, this skewed the average down. When looking at the third quarter stats, we don't see the same trend occurring. So there's differences depending on what type of housing is selling. If the expensive stuff sells, obviously it skews numbers upwards. The other thing that's important to note is generally the markets, including TREB, analyze year over year. In a long-term basis, this makes for a whole lot of sense because you don't want to confuse people with seasonality. Well, we don't usually use month over month, but maybe we should be doing that and instead of comparing the same period to the same period last year. So these are both accurate statements, but tell me, this article says, which one would seem more relevant to you and your condo investment today? Statement number one, average condo prices in Q3 2020 are up 5% over last year. Option number two, average condo prices in Q3 2020 are down 9% from the first quarter. Which one do you want to know? And I think it's quite obvious the second one is far more relevant. And here's a thing looking forward that they say, a fantastic point, because I actually had someone message me, do you think prices are going to drop 30%? I think they're going to drop. I think that's quite aggressive. But listen to this alone. All things equal, right? It's very likely that by the first quarter of 2021, we could be in a situation where we see double-digit year-over-year declines, double-digit year-over-year in average condo prices downtown. And that's under a scenario where prices remain flat from where they are now. How crazy a change is it? So assuming all things equal, expect your condo price to go down year over year by double digits. If nothing else changes, you just heave the same price. You think prices are going to go up over the winter time in this climate? Good luck. Good luck. And that is going to cause further chaos, further confusion in our market. But how simple it is, right? So if prices stay flat, we're already in double-digit territory today. The bigger question will be whether or not condo prices stay flat over the next 5 months or whether we will see more downward pressure on prices. So is it going to stay flat or is it going to get worse? Win-win? Question mark. It's no surprise many are turning to their tiny condos for more space, and we see that happening. Just plain old-fashioned cognitive dissonance. That's what it is. If you buy a sweater that picks up static electricity, simply return it to the store and ask for one free of charge. Can't make those kinds of trades in real estate, unfortunately. All right, let's jump into some hot topics. And I want to actually cover a few things. So we're going to start with rentals. We're going to work our way up. We're going to talk city. We're going to talk province. We're going to talk country. And you're going to learn some stuff. You're going to learn some great stuff. In fact, today is loaded. And I'm having fun, if nothing else. All right. We're going to start off with John Passal's tweet, updates on rentals as of mid-November. So we have now crossed that midpoint of November. So we're starting to get some stats. So let's start with the rental space because that seems to be where there's a lot of problems in the condo space downtown. Well, the trend they're saying, listen to this, GTA condo rental listings have plateaued at around 12,000 the past 6 weeks. You'll remember my last podcast or a couple podcasts ago, we're talking about how the end of the month, they seem to come down and then they go up and then they come down. Well, we're starting to now see over the last 6 weeks, a bit of a plateau. Let's hope this continues for God's sake. Please. Right? We're also starting to see signs that lease transactions are catching up to new rental listings. In fact, for the first time since looks like February of, I don't know, this February, I guess, it looks like the numbers cross. We're actually seeing, like, that is stability, guys. The number of units being leased equal the number coming on the market. That is stability. And we're seeing it. Let's hope it continues on a year-over-year chart. Change in leased condos versus new condo rental listings downtown. That's the chart. You can check it out. Actually, I'll tag it. All that to say that this crazy influx of new listings may finally be getting met with activity of the units being actually leased out. I'm hoping that that continues because that will trickle into condo space, which is huge. It's huge. But if you think about it, bad news for one person is actually good news for another person. Like yesterday, my favorite ice cream place lost power. Fortunately for me, I heard they actually had a liquidation sale. So wherever you stand on the card here, I mean, there it is, guys. And hopefully, for the sake of you landlords have been just getting pummeled, hopefully that there's some stability coming. Well, this is another category that I couldn't find a better place for. This is amazing information, guys. Amazing. And when you listen to this and you're like, holy smokes, I didn't know that, make sure you like this video and leave us a comment, whatever. Send me some love. So there's a rent freeze coming in 2021. You probably heard that. We talked about it on the show. Well, there's an article from Now Toronto, how to challenge an above guideline rent increase. Well, what's an above guideline rent increase? That's exactly what I want to talk about today. Because maybe you didn't realize you can actually increase rent even with the restrictions coming into 2021. Okay, listen to this. The Ontario government has passed legislation to freeze rent at 2020 levels for 2021. This means landlords won't be able to apply usual yearly rent increases to tenants. However, it's a big however. A notable exception to that rule is an above guideline rent increase, also known as an AGI. If you haven't heard of this, you definitely want to check it out, okay? An AGI encompasses any rent increase for the purpose of covering capital expenses, such as major capital repairs or renovations, or, quote, unusually high increases in taxes or security services. Are these things that might be applying in 2021? Maybe. A landlord must apply to the LTB for this type of increase. During the process, tenants will receive notice of the potential increase along with a notice of a hearing. And they're actually part of this article was to say that you don't actually get a hearing. Now it's a written response, which is causing problems for tenants. But the main lesson here is don't feel like you can't increase your rent in 2021. An AGI, though, is capped at 9%. 9% increase? Okay, I'll settle for a 9% increase next year with no more than 3% increase per year. Oh, so 9%, then we're going to go up another 3% from then on. Got it. Each AGI will specify an expiry date based on the useful life of the related capital expenditure. So, for instance, you'd be able to do it for 10 to 25 years. We're doing this major expense thing, and I need to jack it up for the next 10 years. And how many tenants stay in the units for 10 years? Right? So what an amazing opportunity, and what a terrible opportunity or terrible position for tenants. So tenants, you should be aware of this. Hope your landlord doesn't follow our channel. Landlords who listen to this channel, you're welcome. Let's take as much power back as we can, right? It's important that we familiarize ourselves. If you don't know what above average guidelines, above guideline rate increases, or AGI, check it out. Learn about it. Be smart. All right, let's move on. Let's talk about, obviously, we're mid-month. So we've got mid-month stats for November for both the freehold and the condos. Why wait till Treb stats when we got the stats right in front of us here today? Toronto mid-month update. Here we go. When we look year-over-year percentage, the freeholds are sitting around 9%. Now, it's important that we note they were up year-over-year at 68%. That was back in September. Now we're up only 9%. I mean, still incredible. But the condos, they're floating. They were 8% last month. They're still at minus 8% activity-wise. Interesting things to note. It'll be interesting to see how things unfold next month, but that gives you some insight that at least on the freehold side, we're starting to see things starting to come down a little bit. They're not as heated. In a normal year, the next couple articles, because we're going to transition to our next topic here. These next articles would be awesome. Like, this is great news. Like, wow, fantastic. Let me see. This is good. But given the short-term pressure on condo supply, every time I read an article like these, it hurts a little. Hurts like bzz. It's like sticking your finger in an outlet. Bzz. All right. So here's the first one, and all it does is tells us there's more condos en route. If you didn't know already, sprawling glass encased condo towers coming to Yonge Street in Toronto. Talking about 5 new condos underway at Yonge and Finch, and then there's another one, a Blog TO article. 10 new skyscrapers about to transform the Toronto skyline. Toronto is a city of soon-to-be skyscrapers. According to the 2020 North American Crane Index, we have the highest number of active tower cranes out of every city in the continent, with 120 in the downtown core alone. And in a matter of years, these cranes will be replaced by some of the tallest condos in the country. Good news? If you don't own a condo, right? It's funny how these things can flip on you. Meanwhile, suburbs are hot. Jesse Baines on Twitter said, home prices Ontario's Quinte and district of Woodstock, Ingersoll are up 25% year over year. Anyone else saw that coming? Interesting point, right? Interesting point. It's funny to hear the small towns. I find this comical. The small towns acting like they invented multiple offers. Like, this is crazy. Look at me go. Wow. Contrary to popular belief, Benjamin Franklin didn't discover electricity. He just really was shocked by it. And the same is happening with you guys out there. These are all Toronto buyers, okay? Don't take credit for the glory. We've been dealing with this for years. Now let's look across Canada. So we're getting a little bit bigger. We went to the suburbs. We went to the rural. We're going Canada. CBC.ca. Home sales slowed in October, but average prices up 15% in the past years. A group that represents 130,000 real estate agents, me included, talking about Korea, the Canadian Real Estate Association, says that we actually saw more than 15% in year over year and also sales plummeted in the early days of the pandemic. We saw 56,000 homes change hands during the month, bringing the total of 2020 as a whole to 461,000. That's the second since the closures pre-pandemic or during the pandemic. That is the second busiest 10-month stretch in Canadian history. That's incredible. That's incredible. So since COVID, since the freak out, things have been rolling very well across the country. In fact, 6 provinces saw double-digit gains, and one, Manitoba, missed it by a hair at 9.6%. We'll get the hair in a minute. That's really stupid when you find out where we're going, okay? But isn't that skewed by expensive homes, you'd say? Well, yes, it is. So when we look at HPI, meaning by housing type, we actually see it still rose by 10.9% in October, year over year. That's incredible. That's the fastest annual increase in more than 3 years. The most recent being in July of 2017, before the government implemented the stress test aimed at slowing down the market. And you'll remember that caused chaos in itself, right? And we're seeing a difference in home prices and home buyer preferences. The real price strength is in the market just outside, call it 1 to 2 hours of the biggest urban centers, they say. That's a BMO economist. And Southwestern Ontario is seeing annual gains of more than 20% right now. So people that are stuck looking in Toronto for an investment, I mean, that's great too. I think there's great opportunities coming. But if you, as you've seen from some of the incredible guests we've had on our show, the big players, they're looking outwards. They're looking for opportunities to get that cash flow. Why not? There's no certainty in price appreciation these days, and that's the big play in the big market. So, I mean, if you want to get involved in looking at apartments with us, feel free to send me a message. We got a target of getting 50 doors across Canada in the next 2 months, and I'd be happy to partner with you and show you some of the incredible opportunities we got. Make sure you hit me up. So month over month, TD Bank economist Rishi Sodhi said that while still well up over the longer term, the volume of sales slowed by 0.7% in October compared to the previous month. So looking monthly, we're starting to see this slowing. And we saw it halfway through this month locally as well in the last stats that we look at. So sales are likely still well above, they say, fundamental supported levels in October. And in our view, they can only remain that way for so long. Man, economists are so confident now. Y'all are so confident. Out here acting like science, right? It's a science now. Oh, we got to figure it out. Well, just months ago, they had no clue, right? Guys, it's okay. It's okay to know certain things, but still leave some room for discovery. For example, yes, we all agree Black Lives Matter. At least on the show we do, right? But what if we times their mass by the speed of light squared? Then their energy. Oh, playing games in here. Okay, COVID update for you. Vaccine rollout. You probably heard that Moderna in the States, they've got a vaccine with efficiency of 94.5% in preventing COVID. That's now number 2. Less big news, even though it's more efficient, but whatever. The article here, vaccine rollout could cause US dollar to fall 20%. This is a Citi article, or according to Citi. I wanted to share with you guys this article. The widespread distribution of vaccines to combat the coronavirus pandemic and ongoing monetary easing could cause the US dollar to weaken as much as 20% next year. Quote, with viable, widely distributed vaccines hit the market, we believe that this will catalyze the next leg lower in the structural US dollar downtrend we expect. So it's nice to see we're making progress. It's nice to see we got vaccines and we got opportunities. It's good news for a change. But don't forget what's safe, the hard assets, including real estate, the hardest of assets. All right, let's get into our last and final topic. What were the most sought after listings of 2020? I know y'all are sitting on the hair joke still. You're like, where's he going to go with this hair thing? Oh, it's a winner. Don't you worry. It's a winner. All right, so apparently the majority of Toronto want to know where people are, what was amazing in 2020. So $1 million over asking, question mark. The most recent or the most sought after Toronto listings in 2020. This is a Toronto Stories article. I don't give a damn about the listings. I'll be honest with you. I don't. But I thought the article, because it was such a big one, I looked at it and it had some good stuff in it too. In fact, the ones that they shared, there were 3 of them. Tress. They sold for more than 170% of the asking price. Whew! 170% of asking. Damn. We're going to talk about where they came from. But these 3 homes attracted a lot of attention and became the city's biggest selling properties from a list to sale perspective. Good stories, they come in 3. And this article, I'm not going to get into all of it. They go below the belt to the secret and mysterious parts of the market. And they're doing it to the power of 3. Let's call it cubic hair. So dumb. So dumb. Yet you're still here. I haven't scared you off yet. All right. What do you think would bid the highest list to sale price? This is what I got out of this article, guys. Forgetting about the specific listings, what do you think is selling the highest relative to its list price? Well, on this list, you won't find multi-million-dollar mansions decked out with enviable finishes and amenities. Rather, it's made up of homes that are in dire need of some serious TLC. Ultimately, the list is comprised of homes in highly sought-after neighborhoods that will most likely be gutted and renovated, if not torn down completely. I've said it before. Some of the most competitive markets are people looking for low-priced homes. It's why you can literally buy a wholesale off-market and just put the thing on MLS and get a crazy return. It's so competitive. So any of you guys who are looking to do flips and you're looking on the open market, you're doing that thing wrong, my friend. You're doing it wrong. Quote, a common thread between these homes is that they are all located in West Toronto in great established neighborhoods and all required work. I'm not suggesting that any of these were deals, obviously. Deals don't really exist in the freehold segment, which continues to be a seller's market. Anyways, interesting things. If you want to see the specific houses, check out the link in the description. It's not appropriate for our show, so I'm going to leave it there. But anyways, I'm going to wrap this up. Make sure you guys hit the like button, subscribe button, but I like to leave with a little bit of fun. With my power out for nearly 24 hours, maybe I'll get a discount this month on my electricity, right? I've been careful, though, when those bills come in, because there was a time I actually opened the water bill and the electricity bill, and I was shocked. But in all seriousness, imagine how they would have to punish these pesky landlords at the LTB if they didn't have electricity. The judge would sit there on his throne and he'd say, I hereby sentence you to death by the acoustic chair. I hope you guys had some fun. Make sure you hit that like button, subscribe, and download the last 5 episodes. Leave us an iTunes review if you can. And friends, I'll see you guys next time. Take care and keep it real.